Where do you see the future of the life insurance industry?
Some say this is Pollyannic, but I grew up, I was born professionally in the financial services industry in the mid 1980s when I went to go work for the partner of my father, and I was in the pension investment advisory business, so I was kind of in the ERISA space or the fiduciary ERISA fiduciary space. And the similarities between the investment business back then and the life insurance business now is remarkable today. In the 1970s and 80s, there were these things called investment contracts, quasi mutual funds that paid 50% commission to the financial advisor, for lack of a better term, sitting across from the client, which meant that there was more compensation built into that product for other things, for other levels of the distribution system, right? So 50+% commissions on investment contracts. It was a manufacturer's rep business. When I was working for my dad's firm, we had an American Funds sales rep calling on us, trying to get us to sell American Funds products. American Funds had, I think it was 9,000 sales reps at the time. So it was a manufacturer's rep business. The mutual fund business was a manufacturer's rep business. Back in the 70s and 80s, products were sold off of hypothetical projections. The ones that are most memorable because they didn't work out were tax shelters. That there was the tax shelter company would provide a projection of future cash flows based on a bunch of assumptions, and that's how tax shelters were sold, and they didn't work out so well. So you think about the life insurance business of today. Well, the life insurance business is a business that currently has products that pay 50% or more commissions on the front end. It's largely a manufacturer's rep business. Yes, we are gradually moving away from the career or the captive agency system, but it's still a system where producers or producer groups have their 10 favorites, and they not often enough venture out beyond those 10 favorites, even though number 11 might be in the client's best interest. So it's still largely a manufacturer rep business, and we're still, my greatest frustration is we're still selling off of hypothetical projections rather than based off of empirical research about costs, justifying costs, and setting reasonable performance expectations. So few people know this, but in 1974, when ERISA was enacted, there was more money flowing into the life insurance business than into the mutual fund business, which is astounding because now there is tenfold the amount of money flowing into the mutual fund business than the life insurance business. There are some reasons other than, there are also reasons that I think are parallel. The first and foremost was ERISA provided a rule set or an operating system that here's how we're going to conduct business. And it kind of got rid of the last guy with the pencil wins rule. Made the business more transparent, made it more understandable by the consumer. And so, there's a saying in the life insurance business, life insurance can't be bought, it has to be sold. Well, there was a day when mutual funds couldn't be bought and they had to be sold because people were putting more money into life insurance than mutual funds. That changed with a general understanding of what's in the client's best interest by ERISA, transparency, and tools like Morningstar to provide decision support. That same thing is happening. In fact, I got a bet with a former chief marketing officer for a life insurance company that everybody would know the name of. Everybody would recognize a name everybody would recognize. That life insurance, for the same reasons that we just talked, for the same reason that mutual fund sales or flows exploded over the last 30, 40 years, life insurance sales or inflows are going to explode over the next 30, 40 years. Again, because of an agreed upon operating system, transparency, better understanding by the consumer. And, the baby boom generation certainly influenced the flows into mutual funds as they were approaching retirement years. And the baby boom, the several $1 trillion transfer from the baby boom generation is almost certainly going to mean have an impact on life insurance sales for similar reasons.